What's going on, everybody? Welcome back to yet another video. So in today's video, me and Mr. GD over here are going to be discussing sniper entries. We got a lot of value for you guys in today's video. So as always, if you guys do find value, make sure to smash that like button as well as clicking that subscribe button. It would mean the absolute world to me. Also, make sure to head on over to GD's channel. His link will be down in the description. Make sure you guys subscribe to him as well. But let's hop into the video. So, Mr. GD, how you doing?
I'm doing well, bro. How you doing?
I'm good. I'm good. No complaints. So,
Seeing you catch that super good trade today on SPY. Is that what we're covering?
yes, we are. And you caught the same trade, right?
On Amazon, a little different.
Okay. Nice. You had a zone on SPY at the same spot though, didn't you? Or was
I
it lower?
did. It was lower.
Gotcha. Okay, cool. So yeah, we're gonna recap a trade that I took on SPY today. GD is gonna go over what trades did you take?
An Amazon trade.
Just Amazon. Okay, cool. But yeah, so again, our strategies pretty similar, but they're also different. You're more supply and demand. I've been using a lot of Fibonacci, but it seems like a lot of the time these levels pretty much line up at the same exact area. So we're going to be showing you guys how we find sniper entries based off of our different strategies and how we go about defining our stop loss. So we're going to go over the SPY trade that we ended up taking live today in Team Bull. Literally caught the bottom of SPY today. Now it's all the way up, or actually pushed pretty close to 386 from that bottom out at like 380. But pretty much what I was looking for going into the market day was I was looking for possible rejects and possible bounces. So when I'm looking for rejects, I'm taking high points to low points to use the fibs. So I started taking here to here, and you can see we have no good rejects until we get up into like 394.50 and 399. So these levels I don't even care about right now. There's also a clear cut pivot high, pivot low here. And again, nothing until 390. So as far as rejects on this higher time frame, the 4 hour, I didn't really see much. But going into the market day, what I did notice was we do have a high point here to yesterday's low right here. So we started trading up pretty close to 61.8% in the pre-market. That's why I said I'm only bullish if we can start breaking above 383.4. So then on top of that, I was also looking for any potential bounce areas. So the only bounce I believe we're well below this 61.8 right there. So that's not valid. The only good bounce I had from a higher time frame is all the way down at 373.32. So I was looking at smaller time frames. I started taking this low to high, which you can see we ended up breaking below yesterday. So that's not valid. I took this low to high and we ended up breaking, oh my God, low, high, broke below it yesterday. Not valid. This low to high, same thing, not valid. So what I was looking at was yesterday's low, taking that as a potential low point. And then once we started topping out right here, because originally in the pre-market, I told everybody if this were to be the high right here, I'd be looking for a bounce at like 379.84. However, as the market opened, we continued to push into a new high, and then we started pulling back. So we had some news today. I don't even know what it was. It was 10 o'clock news, and we ended up pushing up and then pulling back. So the fact that we started pulling back, we now have a well-defined low point here and a well-defined high point right here. So what we can do at this point is we can take this low to this high right here. And now we have two potential bounce areas that we can watch. And again, ideally, I like that 61.8. That is my bread and butter. That's where I noticed the most bounces and rejects happen. So I was very, very interested in this 380.3 down to 380, just because 380 was or has been a very strong support and resistance zone. So now going into this bounce and this sniper entry that we caught, what I like to look for is a big move going into the area, because if we're talking probabilities, and I keep looking up at the swing that we're in, hoping that it just explodes. But if we're talking probabilities in the market, if we make a big move down like this, it's not a high probability that we're going to continue to drop. So I'm trying to figure out how to word this. Like the lower we drop, the lower the probability ends up being that we're going to continue to drop. Does that make sense, GD?
It makes sense.
Okay,
It does.
perfect.
But I mean,
So
there is anomaly days where you're gonna see a drop like that, especially off news or something, and then it continues. So just the best thing that you can I see what you're saying, but ultimately that doesn't really matter only because you set yourself up on in this trade with a good risk to reward ratio and like, just good risk overall. So either way, if it went wrong, you still had good risk to reward. So you're not really going against anything there.
Yeah. So I guess what I'm trying to say is like, with a trend of a stock, right? We start going up. It's not going to go up forever. Eventually, we're going to get, some kind of pullback. So when we make these big moves into a reject or to a bounce, it just increases the likelihood that we can at least catch something like this. Like for all we know, it could have dropped here, hit here, and then pulled just right here and then ended up dropping. But we could still profit off of that. So again, I'm looking for big moves going into this area, but to actually validate the entry in all of my bounces and rejects is I break it down to a 1 minute time frame. Now, after the move is made into the 61.8, if it were a reject, I'm looking for it to break above and then reclaim the opposite side immediately. So with the SPY, it broke below, dropped all the way down to 380, which was that very strong support point, and then it came back up above the 61.8, and then it held on this 1 minute candle, and then the level 2 started to pick up. I saw the buyers. So this was the candle that we ended up getting long on SPY. Our stop loss was a break below 380 with weakness, because more than likely, if we start trading below here, it's going to go a lot lower. So in reality, we were risking probably like, I don't know, 40, 50 cents. And then as you can see, we got this nice little pop to the upside, and then it just sat here and consolidated for like, what, 1016 all the way up to 1044. So that's why patience is very, very important when you trade. Because again, if we got an entry down here, why would we be freaking out right here? It's nowhere close to where we even entered. So it just sat here and consolidated. Obviously, we took profits as it popped. The contracts did move pretty well. But then as it started to break out, we saw this massive move up into 382.85. Now, personally, I did not catch the entire move way, way up here, but I caught this move right here. This is when I fully exited my position, was on this push right here. Now, looking back, unfortunately, I wish I did hold some, but again, the risk to reward here was way too good to give up. Breakdown, reclaim, stop loss on the opposite side, willing to risk like 40, 50 cents. And then we got this push all the way up into like 382.50 to 382.80. So absolutely beautiful trade. But yeah, that's how I go about my sniper entry.
And I think one thing to note on too is that, with an entry like that, and that like, ended up bouncing exactly when you bought it, right? So you didn't really have much downside at all. Having, a plan and profit targets and risk to reward in place kind of gives you that conviction to hold out and wait for that move. Because, if you're a new trader or whatever you are, and you take that trade and you enter there, you ended up getting a perfect entry. However, if you didn't have any price targets and you were freaking out and you saw a couple green candles and ended up taking the profits, that's good. But in all reality, it's not that great, because your risk to reward wouldn't have equaled out. If you would have just held it, then you could have potentially on this trade made a 1 to 5 risk to reward, 1 to 6 risk to reward trade. So it can only take one trade for you to profit probably more in a week in just one trade, rather than taking multiple trades and making little by little or potentially losing.
Yeah. Like honestly, bro, these last few months, like I would say anywhere from 80 to 90% of my trades has literally just been this, like exactly what we see right here. Because again, the risk is so small that I could lose 3, 4, 5 of these in a row.
Yep.
But the next, 1 or 2 winning trades in this, I'm making back all those losses plus much more. So again,
and
just
this goes hand in hand with exactly what I'm about to show as well. Basically the exact same thing. I think maybe with Fibonacci's, maybe you give up a little less risk rather than supply and demand zones, only because the supply and demand zone could be fairly big. So with my trade today, I traded Amazon, and this one ended up being a little more difficult because the zone wasn't very clear cut. However, I made it work. We'll start on the hourly first. So to zoom in here, it's kind of hard to see the zone that I have marked out. And that's because we touched it a few times in the past, but it's kind of hard to see on the hourly. So, sometimes you have to go look at the 30-minute and the 15-minute. Now, on this scenario, I had a better zone from yesterday, which was around around here, as we can see. However, we didn't hold that zone, so I went to a bigger time frame to find the next zone. I had both of these marked out in the morning, and this is kind of something that I was anticipating. I didn't expect a drop like this, but I always have these levels marked out just in case. So this was my next level down here at this 83. And one thing I could tell about this 83 was that it was just a point where we were holding in like an area of confluence. Like even previous days, we bounced on the similar area, we rejected off the similar area, but this is kind of where I got it from. If we go to the 15-minute, we could see we had this push down and then a big push up, then kind of held it there. Same thing here, held it again. So I was just finding areas of confluence rather than, you know, pinpoint supply and demand zones. This was the zone I wanted at this 84, but we did not. We seen a bounce really quick, which I almost played that, but I didn't because of news. And then we ended up pushing down into this zone. So I felt confident that there was some demand down here. Sometimes it doesn't always line up perfect, and sometimes it's not going to be perfect. But the way I can protect myself is that I can mark out a zone like this and give myself proper risk to reward. So this is what I did. So I found this demand zone on the 15, 30-minute time frame, and I always trade out on the 5 minutes. So looking in here, let me take this zone off since I didn't play it. Looking here, I was watching this on the 5 minute. We ended up dropping down, rejecting into this zone. Well, immediately we see it seem to go deep into the zone, but we see this candle wick up, and then this candle actually exit this zone and close above the zone. So when I seen that, it gave me a good indication that we were going to bounce. But what I did initially first here was just to protect myself and give myself a chance in this type of trade. I always take 25% of my position right when we enter this zone. So right when we entered the zone, I kind of just, you can't see that at all. Right when I entered the zone, I took 25% of my position. So like around here, and then once we started to exit this zone, I took my full position here. Now, the reason why I waited was because, especially on news events or any type of day, like we discussed before, we can always see, you know, more downside. So you don't want to, you want to put probability in your favor. So I waited for this. I waited for this demand zone to be valid to take my full position. Now, my overall risk, you know, assuming my average price was around 83.7, my risk was this low, which was 83.38. So, you know, about, you know, or our close out of the zone, which was around 83.3. So, you know, give or take, just say, you know, 40 to 50 cents down for a potential $2 to $3 move to the upside, which was factored in. As you can see, my price points, I have 85, 86, and 86.98. Those were the type of levels I was looking for to exit this trade because I wanted it to be a bigger trade, right? I did not want to take just a little move to the upside. I wanted a bigger move that gave my risk to reward a good spread. I wanted a 1 to 3, 1 to 4 risk to reward ratio is what I was looking for in this type of trade. So with that being said, this is how I entered the trade and how I managed it. Now, it took some patience down here, and especially because at the time, if you guys couldn't see this, it looked like a big bear flag forming, as you know, we were talking about it on SPY as well. It looked like a big bear flag on the 10-minute. So it took some patience, and this is what trading's about. You know, you never, as things form, you can't ever tell if it's going to work out in your favor. But what you can do is put the probabilities in your favor. Just because, say, if this was a bear flag and this ended up pushing down, you know, I ended up stopping out for a 40 to 50 cent loss, and knowingly that my potential reward could have been $1, $2, $3, $4 to the upside. So that's the way that you should play and set yourself up in the stock market, because ultimately, like we discussed before, you know, one trade can take care of your entire week. And you can lose 4 or 5 other trades and, you know, still be green on the week. So that's really what I wanted to say about that.
Yeah, and I think another thing that really helps with patience is when we are getting these sniper entries, because, you know, I don't want to say we're trying to time tops and bottoms, but we're getting it. We're using a proven profitable strategy to figure out where we could potentially be, topping out or bottoming out. So when we can get entries like this, even if it is forming a bear flag a little higher up, we still got such a good entry that if it did pull back and hit our stop loss, it would be a small loss, if that makes sense.
Right. And I want to clarify something too. Obviously I had more zones down here. Like I could have drawn them down here. Well, I would have drawn, these would be marked out on my chart, but I just want to clarify that, I knew my probabilities were in my favor to go long down here, even at this demand down here. Even if I were to try this demand and it ended up failing, I probably, you sit there and you look at it and you know that your probability is to the upside. It's just when the market, how much money you put into that trade is how much you're willing to risk. But like for this trade's sake, when I marked this zone out, it was more about I seen the move down, and I knew the probabilities. I could set up the probabilities in my favor. Now, is this the best clear cut zone? No, but when you go to the 5 minute, I sit here and I have this zone drawn out, and I see this type of price action reversing, and it only makes sense for me to try it here because guess what? If it did end up coming straight down and going completely against my plan, I only risked 30 to 40 to 50 cents on this trade for a potential big reward. And that just sets me up well to succeed because all we need is what? One trade, two trades a week. Even if we lost 5 other trades that week to still manage to be green.
Right. And then one other thing I saw, can you zoom back out to, I think like the 4 hour? I want to see something. All right. You see, can you take a fib from 8169
Let me
to,
clear my chart real quick. Wait, where do you want it from? 8169.
yeah, 8169 to today's pre-market high.
Today's pre-market high.
There
So
we go.
yeah, 61.
Yeah, I had a feeling it made that 61.8. So, and then just break it down a 5 minute real quick. I'm gonna see. Yeah, so
Yeah,
it pretty much did the same thing.
Literally exactly. Like it couldn't have actually worked out any better right there. So that's something that we can implement too, right? I find a supply demand zone, and then we can come out and find a fib that just gives us extra areas to point out and extra conviction in our trade, right? We take this bounce, maybe, this is a good example for me, even because I sit here and I said, okay, I knew it was a good area of demand. I just couldn't find a pinpoint spot. I waited for price action to confirm my entry. But if I could have went out and used the fibs, then I could have said, all right, that's the spot, right? I could have had a little more conviction here on this trade. So, adding something in there like that could be a big game changer for me as well. So that's a good point.
Yeah, and then with the zone that you have right above it, it did the same thing. You see where that 50% is
Yeah.
in there?
Yep.
Yeah.
50. Yeah.
So again, I feel like there's a strategy that could be brewing with that.
Yeah, I mean that's a perfect example, and you're right. It comes on this 50, literally holds it to a T, touches it in. Like guys, even on that move, like even that move is a nice move. Like if you're scalping, that's a really good move, man. So, even that could profit you, make your day. I just try to set myself up. Now I'm using a little bit of a smaller account. I've been for a while, so I've been trying to set myself up for potential at least a 1 to 3 risk to reward type trade, but. Yeah, I mean, even that is great trade.
Good.
As far as SPY goes right now, I was looking for that supply touch over at this 386, but we didn't get to it. It looked like we were about to. That's what I wanted, a little push up into there to go short, but looks like we're rejecting now. So, but yeah, that's what I would wait for. We could wait, we could take it up here because we're close to supply, right? It makes sense. However, I would like to see it touch my zone and just give me a proper entry. So there's things like this that happen in the market all the time. And there's sometimes you're going to be beating yourself up because you might have missed the move. But part of making sniper entries is being patient and waiting for the opportunity to arrive in your setup and have it make sense risk to reward wise. So
yeah, and I actually want to close on that because that's something also really important because I've missed, many setups using the fibs just because like it got close to the level, but it didn't hit it. And then it just went in the complete opposite direction. But again, at the end of the day, we know what is our highest probability setup. So again, with your supply zone, it got close, but not
Mhm.
close enough. So you simply just don't take the trade. But maybe tomorrow it does come up and it hits it and it validates everything that you see, and then you take the trade and you bank off of it. So
Right.
yeah, I think a lot of people like beat themselves up about it because they're like, oh, it was so close. And then it just, did what I wanted it to do. But that's part of trading.
And there is a thing too where it's like, and sometimes, when I'm 30 cents away from the zone, maybe I'll try like 25% of my position size into it. But shit. Uh,
It's all
but
good.
yeah, there is a thing where sometimes when you're 30 cents away from the zone or something, you want to try it, you can do it and have the risk to reward to kind of make sense. But I prefer just to wait, and there's plenty of opportunities in the market like we see every single day. Like today, I mean, this move was insane. What, from down to 380 to up to 385 on SPY, literally insane move. So, you see these type of things in the market more than you think actually. So, um, you know, always good opportunities around. You don't want to rush anything.
Facts. But yeah, is there anything else you want to say before we end it?
Um, Nothing really. I'll continue to post on my channel. My next video should be about a small trading account, talking about probably around $1,000 to $5,000 in an account. So if you're interested in that, make sure you go subscribe, and make sure to subscribe to my man Brandon right here. And if you guys like these, and comment down below, maybe we'll do another one.
Of course, got to do more. People love it. But yeah, so again, if you guys do want more videos from me and GD, all you got to do, like the video, comment down below, go on over to his channel, show him some love, subscribe to his channel. And yeah, we're definitely going to have more videos in the future. So I appreciate you hopping on with me, GD. And yeah, we'll talk.
All right, cool, bro. I'll
All
see you.
right.